Hey guys, Jared Wesley here of Live Traders, and welcome to the September 3rd Labor Day edition of the Live Traders Swing and Wealth Building newsletter. Okay, so guys, this week, because of the holiday, is going to be a little bit of a shorter newsletter, and it's also a shorter trading week. Obviously, Monday being a holiday, it's a 4-day week, so things will be a little bit condensed even for the newsletter. But let's talk about the market for a quick second, guys. Volatility, volatility, volatility. I mean, that is what has been what we've been seeing in the market over the last several weeks, the last month. But this past week was extremely volatile as well. The same things seem to be concerning the market. You could say afflicting the market, but in some ways we just keep coming back and around to the US-China trade situation. And the market seems very on edge and very skittish still. I said similar comments last week, but it seems to be the same as we move forward. What's interesting about this, guys, is that yes, there are some issues with the US-China trade relationship, and we're trying to iron those out, and it was supposed to be done 6 months ago. So yes, I understand some of the skittishness from the market, but when you think about the big picture, guys, think about what the economy is overall. Consumers drive the economy, okay? And right now, consumer spending is outstanding. So consumer spending is very good. The unemployment rate is at a 50-year low. Corporate earnings are still increasing at a slightly slower pace, but corporate earnings are still increasing. Interest rates are extremely low. Monetary policy, for all intents and purposes, is relatively fair. Okay, they've done nothing truly extreme. Stocks are still going higher, guys. So the point I'm simply making is, big picture, the US-China trade relationship is important. But compared to everything else we just talked about, from consumer spending to jobless claims to unemployment being very low to interest rates being low to monetary policy being fair and corporate earnings being good and stocks going up, things are overall strong, guys. Yes, we are cooling off, but this isn't like we're falling off a cliff. And the reason I'm saying this to you is the market would have you think that if something doesn't get ironed out with China, that the world is ending. Chicken Little, the sky is falling. And that's just not the case. But as traders, we're going through a lot of volatility these days. So just keep that larger picture approach, which is what the Swing Trade newsletter is all about, taking a larger picture approach. Now, it does make swing trading challenging at times, because one day you get a massive wide range red bar in the market, it stops out all your longs and makes your shorts look good, and the next day you get a massive wide range green bar, it stops out all your shorts, and you're not in the longs anymore because they already stopped out. So we're fighting that volatility, which is why I've been commenting on it. But big picture, things are still okay. In terms of the market this past week, the market was actually up quite a bit. The Dow was up 3%, the NASDAQ and S&P about 2.7, 2.8%, and for the year, the NASDAQ is back about 20%, up 20% for the year. The S&P 500 about 16.7%, and I believe the Dow is 13 or 14%. So still, guys, we're coming into September here, and the market is still very, very strong. We still have one more quarter to go, and we'll see how that plays out. In terms of economic data, not a ton on this shortened week, guys. We have ISM reporting on Tuesday. On Thursday, I believe we also have jobless claims on Thursday, and then unemployment on Friday. So those are the three semi-big reports. All in all, not a big news-laden week. Again, it is a shortened week. For that, I have five new ideas for you guys this week, mostly on the long side, but I do have one short play that I think is very interesting. So let's get to the computer, guys, and take a look at those ideas. Like I said, it's going to be a slightly shortened newsletter this week, so I'm going to go over the new ideas very quickly. I'm going to go over what we're already in and some of the ones we closed out as well. All right, so let's dig in, guys, and take a quick look at the market. Okay, guys, let's dig in first by taking a quick look at the SPY and the Qs. Then we'll take a look at the trades that we're currently in, and then the 5 new ideas I had for you guys. Like I said, it's going to be a slightly shorter version of the newsletter this week. I apologize because of the holiday week. I haven't had quite as much time to do this. So Last week actually was a pretty bullish week, up 2 to 3%. But you can see the line here on the SPY, right here at 294.24, give or take, right there. If we look at the moment, we look poised to go above this area and potentially retest the 302 high, right? So you take a look at here, 294 all the way up to 302. So you have about $8 of room now. Now, obviously, we don't have any support until we get back to the 283 area. So the market, and you can see here, since basically the August 1st, July 31st, give or take, has been extremely volatile, okay? But we look poised to break out of that range and possibly retest new highs. So for the coming week, assuming that the news stays relatively similar, which is basically saying we're going to be largely focused on China and everything else will take a backseat. Well, sure, a tweet here or there could change things, but at the moment we do look bullish for the Qs to break over 190 and possibly push up into the all-time high territory, and the SPY the same thing. We look higher over that 294 area on the SPY. Okay, so let's pull up the spreadsheet, guys, and take a look where we're at real quick. Okay, right here is the Swing Trading Newsletter result sheet. For those of you guys, and this is very, very, very important, guys, this is on Google Docs. Okay, you have access to this with the newsletter. This is the most up-to-date sheet that we use. I understand, I know that Anmol is supposed to put out tweets every time we change something, but sometimes he forgets or doesn't get around to it, or it's a little bit late, and I know that that's sometimes unacceptable, but this sheet is extremely up to date all of the time. Okay, so if you're unsure about something, check the Google Docs spreadsheet. It is up to date 99% of the time. Okay, so right now, guys, we are currently in 2 open positions. Okay, we are in Baidu long and QNST. Okay, so when you take a look at these right now, Baidu has been doing fairly well, but then it pulled back recently, so it's hanging just below break even. QNST is also roughly right around break even, maybe slightly above break even. Those are the only 2 open positions that we have. Now, we closed out Hain last week because of earnings, and thankfully we did on the Hain. But anyway, we were in this and we had to get out again because of earnings, guys. We lost a little bit on this, which was, I was hoping to get an entry on this thing that would allow us to get out at break even or maybe even make a little bit of money on this thing. So again, it is what it is on the Hain. We ultimately got out in that 1860 area. It's a shame the day before we could have gotten out right for 18 bucks. And we ended up losing about half of an hour on this thing. It is what it is. We also closed out SYMC last week, which was very, 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 one more time, very disappointing because this one tagged us by about a nickel, 4 or 5 cents, and then ultimately pivoted and went higher. So SYMC, unfortunately, and I gave this thing about 6 or 7 cents under the current pivot, and it still went 5 cents below that. So it is what it is. I'm going to continue to keep an eye on SYMC. But that's pretty much it for last week. We closed out ALGN for a half of an hour gain. This was disappointing because we were down in the 172, 171 range, and this thing came all the way back. So we got some off at 1R for our first target. And then about a week later, a little bit later than that, we stopped the back at break even. Okay, slightly better than break even. Okay, about $1 in the money on this thing. So good news is this thing would have ultimately gotten very close to our stop loss. So taking a half of an R from this was actually quite good. So little disappointing on ALGN, but it is what it is. SYMC, this was just unfortunate. We just got a little bit unlucky on that. And then obviously Hain a little bit unlucky as well. So not the best week. We lost an R last week, 1% last week. But it is what it is. So we're still in 2 open positions. Also, guys, as a side note, it's very, very important. I want to put this up on a different monitor. I got an email about CPLG, and somebody said that, I think it was CPLG that I'm talking about, that triggered the entry. It technically did, but it only printed 143 shares down there, guys. So I didn't get filled on it, and I'm sure most of you didn't. For 143 shares with hundreds of people in the newsletter, So I didn't put it in here, guys, on the CPLG, but if you're one of those 1 out of 2 or 300 people that got filled, let me know. But anyway, that one, it technically on the chart triggered on the penny, but it only printed 143 shares there. So I didn't get filled on it, so I didn't put it in a newsletter, just as an FYI. Okay, also, ROST, R-O-S-T, triggered the stop loss on the penny before it triggered the entry. So ROST got canceled. In case some people are going, wait, Jared, ROST went to 108.50, 108.48. The entry was 108.30. Well, that's true, but it hit 102.00 before it did that. Okay, so it triggered the stop before it triggered the entry. I will say, over 108.50, I didn't put it on the list this week, but you can watch ROST this week. Over 108.50 looks very, very good. I've been tempted to put it in the newsletter this week, but I chose not to. Okay, so let's dig in, guys. Let's take a look at what we have. The first stock I have, guys, is Merck, M-R-K. So what we have here, guys, is a daily and weekly breakout on Merck. Okay, whoops, mistyped that in. I apologize. All right, so here's our weekly chart. All right, and then here's our daily chart. Notice the pivot high here in June, okay, and then we have these pivot highs over here in August. So we're going to look to get into Merck, guys, at $87.40, right over the high here. 87. I'll draw a line right across it. $87.40. But this is where we get, I don't want to say a little dicey, but I'm not going to give this a lot of room. This is either going to work or it's not, and it's going to happen quickly. So we're going to put our stop loss under these two red bars right there. Instead of putting it under 85, we're going to put the stop loss under this area at 86. So the entry is $87.40 with a stop loss at $86. So it's tight. It's going to either hit and run or it's not going to work. So right now you're still $1 away from triggering, plenty of time. The target is $90.20. And the earnings on this is October 29th. Okay. Next is WW. WW actually has a really pretty weekly, kind of a 4-bar play almost, but not quite, okay? So I'm going to refer to this more as a daily breakout, in a transition, right? So we had a stage 4 downtrend, stage 1 triple bottom, and now we're moving into an early stage 2. If you drew a trend line through here, boom, 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 you're above the trend line. So our entry on WW will be 31.60. The high is 31.59. So 31.60, okay? And the stop loss, again, we're going to go a little bit tight. Instead of putting it under the whole base, it's 27.50, we're going to actually put the stop loss at 29, meaning these are going to work or they're not going to work. Now, why am I doing this on 2 or 3 trades this week? Because I've been experiencing lately that they either work or they don't recently. Because of the volatility is flushing out wide stops, small stops. It's just flushing things out. So by using a tighter stop, we have a better chance of reaching the target quicker. And some people go, well, you also have a higher likelihood of getting shaken. That is true, but everything's being shaken, okay? Not just this area, but the whole base will be shaken. So we're going to get in this at 31.60 with a stop at $29, and our target will be 36.80. Earnings are November 5th. Next, CDAY. CDAY. This is a beautiful, beautiful weekly 3-bar play. Wide bar, narrow bar, hopefully rip, right? Wide bar, narrow bar, rip. So we're going to get in right above the top here, okay, at $59. That's the top. $59 entry with a $55.90 stop loss. That takes us right under there. Let me draw that line right there. All right, that's the low, $55.95. Our stop loss is $55.90. So we have about a $3.10 stop loss. Our target is $65.20. Earnings, October 29th. Next is IOVA. IOVA. And what do we have? A beautiful weekly bicep. This stock ripped, pulled back to what we have here, guys? Level 2 support or minor support right here, okay? And it left a green bar right there and technically triggered the weekly buy setup. So what we're going to do here is we're going to get in over the weekly high at 21.50. Entry is 21.50, but I'm going to change it up again a little bit. The daily, I'm going to go down to the daily and we're going to use $20 as the stop loss. Instead of using 19, we're going to use $20 as the stop loss. So again, a slightly more aggressive stop loss. So the entry is 21.50. The stop loss is $20 on this. And the target, guys, is $24.50. The target is $24.50. Earnings October 31st, so far away. And last but not least is GLNG. GLNG. The negative on GLNG, guys, is 1, 2, 3, 4, 5, 6 weeks down here. That's a negative. But if we go to the daily, what we have actually is a little bit of a 3-bar play, right? A wide range red bar taking out 3 green bars, okay? And then a narrow ranged doji bar with a a topping tail. So we're going to enter this right under that. It's a perfect daily 3-bar play taking out a double bottom. The only negative is the weekly is slightly extended, but we're going to try to scalp this. So we're going to get in at 1160, which is under the red bar. Our stop loss will be 1230, which is above the topping tail. Our target will be $10.20. Earnings are November 28th. Okay? So 5 quality ideas, and I will put up Rost real quick, guys. If you guys want to take Rost, you can do that. You can see it right here. Very tempting to get in Rost at 108.50 with a stop right around 106, 105.75. I'm very close to calling this in a newsletter this week. I'm probably going to regret not calling this. Okay, I'm probably going to regret not calling this. But 108.50 by 105.75, you're looking at about a $4, $3.75 stop loss. This thing looks higher, guys. Okay, but anyway, I'm going to put up this week's ideas. We have 5 ideas for the week. It is Merck, MRK. The second idea is WW. The third idea is CDAY. The fourth idea is IOVA. And the last idea is GLNG. All right, and guys, this Rost really looks good to go higher. Okay, it really does look good to go higher. So let's keep an eye on that. All right, so those are the ideas for this week, guys. We're still hanging around that 10% range for the year. I'm a little disappointed so far, but I think the last quarter we'll get into the 20s, and we'll see how that goes. Okay, so that's this week's newsletter, guys. Enjoy your Labor Day holiday, and I will see you guys again next week. Jared Wesley of Live Traders signing off.